Hello everyone, how's it going? In this video, we will talk about Mullen, trading under the ticker symbol MULN. Mullen has been a very interesting company to trade recently, with high volatilities and also many projects that may fuel future speculations. At the same time, it's a company that the market tends to not trust too much with the capital, especially when it comes to long-term investment. So, in today's video, we will go through the latest fundamentals, the price actions, and my analysis, as well as recommendation to hopefully see what is the best course of action to carry out regarding Mullen. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description, as every help is greatly appreciated. When looking at the price action of Mullen these days, I think we should almost use it as a test to our capacity to tolerate extreme levels of pain, deception, and sensation of feeling cheated. And then maybe like a third eye will open on our front and show us the primordial truth that no matter how many stars are aligned on the same destiny, on the same path, as long as we don't dive in with all our chips in the pocket, things should still be fine in the long run, even if those stars don't mean anything. So what do I mean by that? Mullen went from around 50 cents not so long ago to less than 20 cents. What are we supposed to say when the company we're rooting for, even if it's just for the quick money, decided to just follow the flow? Of course, we can always blame the market for whatever happens to Mullen, but ultimately, I think that it's a question of trust, integrity, that really tippled the balance. We all remember that Mullen isn't really a company that's new to possible scandals, the accusations of this and that, of just dodgy vibes, right? So this time though, it seems like it's something even more serious and more substantiated. Recently, Mullen lost its chief accounting officer. And that chief accounting officer was linked to the purchase of Bollinger at the time. So the math side of things is that they didn't have that much money, but somehow they magically appeared enough money to buy it. So where does that money come from? Do things even add up? Did they move funds from one place to another in order to make this play? So I'm not a genius nor a crook, for that matter, but if people suddenly decided to pack up and leave a ship, it's either because, one, they like to swim in a stormy ocean full of sharks, or two, they feel like becoming rats, just fleeing a sinking ship. By the way, sorry for the rant, but if you're here, you probably know that Mullen by now has pierced through the 20 cents level. And to be honest, this just carries some significant symbolic and psychological effect on me. Personally, I think that we should start changing our strategy going forward, for which I'm going to discuss in just a bit. Mullen is an American EV manufacturer that has known several different iterations over the years, from Mullen Auto Cars to Coda Automotive, and now Mullen Automotive. On paper, it is one of the companies with the longest continual existence in the EV sector, way before the current giants began to blossom into people's mind. Mullen has tried over the years to gain traction by launching new products and announcing new partnerships in order to attract more capital in the sector that requires oh so much money in order to keep the ship afloat and the operations going. Does this mean that Mullen lacked the capacity to stand on its own feet? Yes. Does it mean that Mullen is so struggling to find its break-even point? Without a doubt. In fact, if anything, there are reasons to believe that Mullen is now facing challenges that are even bigger than the issues from the past. People may have stopped believing in it, and the market has questions about its long-term sustainability. I mean, for example, people are sensitive to the CEO's reputation, the nomination of his associates on the board, and that a company has developed no substantial products so far, despite repeated announcements that they have done so. These aspects are not necessarily new. What is different with Mullen this time is that even its announcements seem to attract less and less reaction from the market. And for that, we have to look at the management's past choices along with the global macroeconomic trends to figure out the causality. Mullen has had a habit of disclosing as little information as possible to the financial market, and that sometimes it even chooses to omit significant details like the identity of key partners and clients, as well as the financial health or even the existence of their key suppliers, such as the company manufacturing Mullen's batteries, which was advertised as one of the better ones in the industry, prompted its price to soar by more than 120%. Despite the fundamental and reputational challenges, there are two major elements that justify the continuing interest that people have in Mullen: volatility and short squeeze. Mullen is a small cap that is currently priced around its historical low. From a probability-based perspective, this would mean that the likelihood of the stock to go upward is far higher than to reduce from 20 cents to zero. After all, there isn't much space to go further down, whereas the logical development would be to reach higher levels when the timing is right. This would, of course, assume that Mullen somehow managed to continue its operations, or to at least maintain the going concern. This brings us back to the price volatility argument mentioned previously, whereby small caps have a tendency to experience irrational moves and sudden surges in both price and volume. If a certain number of traders decide to pull in, then from a percentage-wise perspective, this kind of price action can be very, very attractive, because a mere 30 cents increase can mean that the stock would increase by more than 100% from its cost basis. Mullen has obviously been greatly impacted by the ongoing market-wide bearishness, perhaps even more than the rest of the sector due to the lack of any substantial product in play and the absence of clear objectives. I don't mean that a company doesn't share any news announcements, but simply the fact that the public doesn't seem to take them seriously enough to reflect these in sales volume. The volatility seems, therefore, to be random for the most part, with some correlation to be predictable with Nasdaq recoveries and the conversation trends in online discussion. These online discussions are one of the keys to really understand what makes people buy or sell Mullen. Since retail traders are by far the biggest category of Mullen shareholders, these decisions often happen on a whim, with the assumptions that the stock may have massive redemptions in its short seller ranks, whether there seems to be a lot of tractions on a specific topic, and if there seems to be a sudden uptick in the number of conversations surrounding a specific topic about Mullen. These are highly random, or way too unreliable to be a determining factor, or so it seems. But if you think about it, how do most retail traders make their decisions? Is it really the fundamentals, the long-term tendency of an industry? When we're talking about Mullen, a small cap with doubts that they have more hustlers than genuine entrepreneurs? I mean, really, can we really tell whether the announcement of iGo in Europe would create a massive spike in the beginning, but barely any reaction when they actually began distributing? Or perhaps more telling than these two cases is the fact that Mullen share price tumbled by 60% shortly after they announced that they have managed to reduce the company's debt by $13 million, which is huge for a company of that scale, increasing greatly the company's likelihood to survive. But with all those announcements, I haven't really seen a logical reaction, and possibly because the focus is not dictated by logic or any sound business analytics, but by online chat rooms and forums. Therefore, I think that a key factor to take into consideration when trading Mullen is to accept that we are here as short-term speculators on a wobbly stock, hoping that there will be sudden price jumps to justify a participation in the equity. The overall impression regarding Mullen is that it is a company with clear tendency towards speculation, with large potentials of profit in terms of percentage, and mostly relies on irrational factors to boost the share price. So basically, at this point with Mullen, I think that whoever wanting to buy Mullen shares would have already done so and should wait for more signals before engaging more funds. If anything, please keep looking, but elsewhere, if it makes sense. So we'll keep an eye on the latest developments. We should also remember that, here things are still happening. So we need to keep an eye here as well so that we can start picking up the tastiest morsels of whatever that's left once the vultures and the bears are done pecking at it. Because who knows, maybe another round of rockets are long overdue, just a few months down the road. If you want to risk your money with Mullen, please risk the amount of money that you can afford to lose. And for me personally, for example, that is the price of an expensive meal. Maybe for you, that is the price of an expensive mansion. In that case, good for you. I'm really jealous. But regardless, risk the amount of money that you can afford to lose. Don't put in the kind of money that you cannot lose, that you cannot get back from in Mullen.